Hello everyone. Today is December 14th, 2023, Thursday, 12:36 p.m. Let's briefly discuss today's Forex market. Firstly, the main point is that the net profit is negative, around $4,000. The current net worth is around $621,000. As for yesterday, the Federal Reserve's interest rate decision was completely announced. Overall, the Federal Reserve did not raise interest rates, and the Fed chairman's remarks were very dovish. In response to this, the US dollar experienced a significant decline, while both gold and non-US currencies saw substantial increases. At present, looking at the situation after last night, the market has become clearer. Personally, I did not make any moves last night. I refrained from trading due to certain reasons discussed in the class last night. However, I ended up buying crude oil and took a short position. As a result, I incurred a loss in one crude oil trade. So essentially, I made only one crude oil trade yesterday, resulting in a loss of around 40 points, and I refrained from making further trades. Today, let's take a look at the US dollar index. The US dollar index has already broken below and is in a downtrend. At this position, there is a high probability that the US dollar will continue the trend from yesterday's candle, indicating a probable shift towards weakness in the daily chart, likely in a downward direction, possibly establishing a bearish tone. Therefore, I've removed the previous trend lines. At this point, it might be challenging to identify the earlier trend, and of course, we can't be too certain as it's essentially a large bearish candle. In terms of the market, whether the current trend will reverse or not, or whether today's trend will play a crucial role, we'll have to see tomorrow. It's essential to confirm how today unfolds. However, from the current perspective and based on the known market structure, the US dollar index seems to be inclined towards shorting at higher levels. A favorable level might be around key resistance, for example, around 103.2. This is a significant resistance level. However, considering the current distance from 103.2, it seems relatively far. Therefore, one might consider shorting the US dollar around the level of 103. If one decides to go long on the US dollar, I personally think that initiating a rebound trade around the vicinity of 103 could be considered. This summarizes the situation for the US dollar index. Talking about gold again yesterday, it experienced a one-sided upward trend. After the data was released, it basically didn't experience any declines and moved directly upwards. From 1980, it rose to the highest point, close to 2040. It rose by $57, nearly a $60 increase, which is quite exaggerated. Looking at the daily chart of gold, what it needs now is this upward trend, which was expected. But what was unexpected is how rapidly and strongly gold rose. I believe such an increase typically takes 2 to 3 days, maybe 5 days to complete. However, it was completed in just a few hours last night, which exceeded expectations in terms of intensity. Currently, for this upward trend in gold, at the daily level, if you want to trade within the day, it's about considering long positions cautiously. However, looking at the chart, where is gold heading? Gold has reached a crucial resistance area, particularly in the 4-hour time frame, creating a resistance zone. In this position, what will gold do next? It will engage in a critical battle. In other words, in this area, if gold stabilizes, specifically around 2040, it might further rebound. Conversely, if it cannot break through this area, gold may experience a pullback and move in a more oscillatory manner. So, for gold now, you don't need to rush into blindly chasing long positions. Of course, there is another heavyweight data released tonight, the CPI, which is also crucial. So, if I were to trade gold tonight, I would consider going long if it stabilizes above 2040. This level acts as resistance, and if gold holds above 2040, the bullish outlook becomes more evident. On the other hand, if it fails to stay above 2040, breaking through this area might not be that straightforward. If I were to trade gold today, how would I approach it? I would consider going long on a pullback around the vicinity of 2020. That's the area I would consider for taking a long position in gold. Around 2020, we consider going long on gold. Tonight, there is the CPI data release at 9:30 p.m., which I personally lean towards. If I were to trade, I would be willing to PI set some long positions in gold because I believe tonight's CPI release has the potential to help gold break through the resistance zone around 2040, allowing for further upward movement. I want to emphasize that my opinion on the CPI data is not based on intuition, but on my observations, analysis, and research. I analyze the data and make predictions based on reasoned judgments. It's not just a gut feeling. It's a result of careful analysis. So, for tonight's gold trading, around 2020 is a good level to consider going long, particularly with the anticipation of the CPI data potentially providing a positive catalyst for gold to break through the 2040 resistance zone. Looking at today, if we go back to 9/29/9/28, just before the data release, I would POE set some long positions in gold because I believe there's a chance for gold to open up towards 2040. Additionally, I don't expect the data tonight to be disappointing. As for crude oil, after the false breakout yesterday, I won't trade it today. I've decided not to trade crude oil for the rest of this week. I have a feeling that it might have reached a bottom, so I'll reassess next week. Now, looking at the euro, it pulled back yesterday. In the overall trend, there isn't a clear sign of a pullback, but if you're observant enough, there are indications. Personally, I tend to be less sensitive to such signals. I'm someone who often realizes things in hindsight. Regarding the euro today, the strategy is to go long on a pullback, focusing on the previous high near 1.083, around the area of 1.083. This assumes a pullback with an emphasis on the strength of the retracement and how well the price consolidates in that zone. As for the British pound GBP, the approach is similar to the euro, considering a long position on a pullback. The trend, as indicated by yesterday's line, shows a completion of a conversion from bearish to bullish. The pullback provides an opportunity to go long, with the previous resistance turning. So, the key strategy for today is to observe the pullback and consider long positions in both the euro and the British pound. Today, the focus is on observing how the dollar USD continues to perform. The strategy involves considering short positions on a continued decline. For gold, if there is a pullback around 103, it's suggested to go long. Around 2020, if there's a pullback tonight due to the 0% interest rate, it's recommended to PI buy long positions. As for crude oil, the decision is to wait and not trade this week, as there's a sense that it may have reached the bottom. Regarding the euro EUR, the plan is to go long on a pullback around 1.083. Similarly, for the British pound GBP, a long position is considered around 1.259 during a pullback.